Wall Street ends mixed. Dow and S&P 500 give up gains while the Nasdaq ended at all-time high for the second straight day. Asian markets are mixed in early trade. And all eyes on the U.S. Federal Reserve. The two-day FOMC meeting ends later tonight. The central bank is unlikely to make any major changes, with its benchmark rate near zero and asset purchase programs continuing. But the key to watch will be the forward guidance, as this will be the first forecast for the economy and interest rates since late last year. Two-wheeler major Hero MotoCorp reported better than expected profit in Q4, aided by lower tax expense. Margins come in at around 10.6%. That's bang in line with our estimates. And Vijay Mallya sought asylum in the United Kingdom on humanitarian grounds, argues that his right to health is threatened in India. This is the reason behind the delay in extradition process, even though he has exhausted all legal opinions. Very good morning. Welcome to Power Breakfast. We are in the Mumbai News Center, and I'm Nigel D'Souza. First up, let's tell you what the Asian markets are doing early this morning. They're mixed in early trade. In terms of data, China's May CPI inflation, that's risen to around 2.4% odd, but it's a mixed bag really to open up. The Shanghai market's under some pressure. You have the Hang Seng as well as the Nikkei. Both of them are holding mildly in the green. In fact, the Nikkei has now moved into the green. And the rest of Asia as well, some of those markets are trading in the red. Now, they've recovered from the low point of the day, so that's pretty good news. In yesterday's second half of trade, on the final hours of trade, we did see the Nifty did see a bit of a downtick. Now, to start off with, the SGX Nifty is indicating that maybe, in fact, we could start off in the green, but you need to compare the SGX Nifty and, in fact, the Nifty futures. So that would be roughly around, a 60-point bump up to kickstart trade, 50 to around 60-point bump up. So closer towards the 10,100 mark odd is what we are bracing ourselves for. What happens post that is going to be crucial. Last couple of days, 10,300 we have kissed, and from there we have seen a bit of a U-turn. So if we get that start 50, 60 points in the gain, sustaining that will be quite important. But turning attention to Wall Street, then stocks out there, they ended mixed. The S&P 500 and the Dow, they paused after the recent strong gains that we've seen, while the Nasdaq ended at all-time highs for the second straight day. Remember, intraday, the Nasdaq did breach the 10,000 odd mark for the first time ever as well. The Federal Reserve's two-day meeting will end later today, and investors will be watching for any kind of guidance that will be coming out of the Federal Reserve. CNBC's Aditi Roy gets us a wrap of what transpired on Wall Street.
Stocks taking a breather from the recent run-up. The Dow losing 300 points, the S&P off 25, and the Nasdaq finishing in the green, up 29 points. Job openings tumbling to just over 5 million in April. That's the lowest level in more than 5 years, according to the government's job openings and labor turnover survey. That was 1 million below the March level and a 28% tumble from February. The report showing that separations fell sharply month over month. Plane maker Boeing logging more order cancellations than new orders in May. The company reporting just 9 orders and twice as many cancellations. Boeing's backlog shrinking to 4744 planes, the smallest since 2013. And after outbreaks at several of its warehouses, Amazon ramping up its plans to test fulfillment center workers for coronavirus. The company's goal is to test the bulk of its workers every 2 weeks, according to 3 people familiar with plans. The company is also planning to develop diagnostic labs in several sites. That's the action from the U.S. market. Back to you in Mumbai.
Well, the Federal Reserve is unlikely to make any major policy changes, but forward guidance is the key. Steve Leisman is here to give us CNBC's Fed survey.
The Federal Reserve starting a critical 2-day meeting. The CNBC Fed survey shows that trillions more are expected from the Federal Reserve in terms of growing its balance sheet, and a variety of programs already launched and maybe some yet to come, along with additional help from Congress. Take a look at the Fed expectations. 100% expect no change in rates at this meeting, but 76% say over the next couple meetings and months, more will be coming from the Fed in terms of programs to assist the economy and its recovery from the coronavirus shutdown. 2.8 trillion is the average expected growth in the balance sheet from the current level of 7 trillion, bringing it up to just about $10 trillion. Every dollar above where it is right now is a record. 0.11% is the expected Fed funds rate at the end of 2021. So rates are expected to remain low for a very long time. What more can the Fed do? Well, 51% say the Fed can offer data-based forward guidance. That is, pick an economic indicator, not raise rates till that indicator is hit. 42% say additional quantitative easing. They could pick more than one. That's why it doesn't add up to 100. 29% say bond yield cap, something that's been talked a lot about, but not a lot of support there among the respondents. What about Congress? 54% say the U.S. Congress has not spent enough to provide relief for the economic shutdown. 20% say it's just right. 27% say more than needed. How much more will the Congress provide? $1.5 trillion. It's already provided 2.7, so much more thought to come from Congress in terms of relief. And who needs that help? Well, state and local governments. 93% of respondents say that state and local governments need additional assistance. 70% say small businesses, 50% say workers, and 40% say minority communities. A very long way to go. According to the respondents who believe that it could be a year or more till the U.S. economy fully recovers, and even see an unemployment rate at 7.5% compared to 3.5% before the crisis began. That's 7.5% all the way to the end of December 2021. Steve Leisman, CNBC Business News.
Well, here's also some opinion coming in from former RBI Governor Raghuram Rajan on the Fed's trajectory.
It's expanded its balance sheet. It's lending to pretty much anything it can lend to, plus some more. It's lent to firms. It's lent to municipalities. The Fed has really pulled out all stops. Now, in terms of what it can do more, on the monetary policy side, very little apart from saying, we will not raise interest rates until thus and such criteria are met, and will be a little more tolerant on inflation. Perhaps some word on that will come in future meetings. The key concern for the Fed is in the short term, it doesn't want financial markets, especially credit markets, to break down. Because the concern also is if it props up companies that are better off restructuring, going through bankruptcy, sometimes even closing down, it may prevent the economy from going to where it really needs to go over the medium term. I think they will make comforting noises about being around, providing what support the market, the economy needs, about not raising interest rates anytime soon. I don't think they will be very precise about what that means, but they will certainly indicate they're going to be around, and also making sure that all these programs that they've announced are in fact fully rolled out. We saw, as you said yesterday, some tweaks to the Main Street lending program. That is important because it targets mid-sized companies. And they will also make sure that the other programs they have in place are working as advertised.
Okay, turning our attention then to the European stock markets. They closed lower. Investors weighed the prospects of an economic recovery after the coronavirus pandemic. In yesterday's trade out there, we did see that the CAC and the DAX both ended with a cut of around 1.5%. The FTSE, however, was down close to around 2%. We did see a lot of the stocks that ran up in those markets. They did come in for some big profit booking in yesterday's trade. The banks, other resources-based companies, they in fact had a bit of a run. They came in for profit booking. That's why European markets ended well in the red. But turning attention to the currency space then, the dollar has eased versus the basket of currencies ahead of the Federal Reserve meeting outcome, and some speculation that the central bank could take steps to curb a recent rise in bond yields. Currently, the dollar index has moved to around 96.4. And the world of commodities and crude oil prices drop coming off 3-month highs after U.S. inventory buildup renews oversupply concerns. Remember, a couple of trading sessions ago, Brent had moved all the way to around $43 per barrel. Now, in fact, it's sub that $41 per barrel mark. Well, time to slip into a short break. You come back, we'll tell you the cues that are stacked up for us.